What's up, guys? This is David, aka Reverse Long, and today I have Dave Mabe on the podcast. And Dave is he's known for algorithmic trading, and that's his specialty. And today we're going to go over some topics that I've been interested in talking about, and see Dave's thoughts on it. So, but before we get into all that, we're going to get a background on Dave. So Dave, yeah, if you want to give the viewers a background on yourself.
Yeah, thanks for having me, David. This is great. I'm glad this came together. Um, yeah, so I've been trading for 20 years, most of that systematically. I started off with in 2005 trading a system that was kind of popular at the time. Traded that for many years, started backtesting in around 2010, automated trading shortly after that. Um, so yeah, I've been systematic trading ever since then.
Awesome. And so I've noticed you on a lot of podcasts recently, some of the ones that I watch, and some prop firms, well, some real prop firms like in New York and stuff, SMB Capital for one of them. So the interest, like what have you been speaking on or touching base on mostly? Like what's the main takeaways after all that, those experiences you've had with those like super legit traders and podcasts and these big players out there?
Yeah, I've got a partnership with SMB Capital. I work with a lot of their guys. The thing I like about SMB Capital is they're a discretionary firm. I mean, that's what they're really their bread and butter, discretionary trading. You know, look for big trades to make and hit them with as much size as they can. That kind of trader has more potential with automated strategies than they realize. So that's where I can really help them unlock a lot of the ideas. Like some of their best traders are really good at knowing when a strategy is purely discretionary and when it's modelable. So I work with them a lot to help them define that and help them recognize when their ideas are modelable and which ones, and maybe, something tangential to the way they're trading now, they can turn into an automated model. So yeah, I love working with traders like that because they're better. There's so much potential to unlock. They're usually a lot better than they think they can be. And, and specifically on the automated side.
Um, so interesting because yeah, I'm a discretionary trader myself, and I use a lot. I have some friends that are very good with data and programming, and they do algos, but I still collaborate with them in collecting data and utilizing the data into my rules and my criteria and my trading systems. Now, I remember early on, it's like when I was learning the difference in discretionary and systematic, I thought I was like either one or the other. But it's
Mhm.
like discretionary. So I want to get your thoughts on this too. So discretionary it's from my experiences. Discretionary traders are more open to systematic approaches and like can we as discretionary traders, I'm speaking about those discretionary traders listening to the podcast. Um, we have to have our ears to the ground, like in paying attention to data and systems, even though we're not a systematic traders. We're not systematic traders. However, from my experience, systematic traders, I know a lot of them, not all of them, but a lot of them are like really I wouldn't say like hard-headed, but they would be like, they're not open to ideas. Like this their way or the highway as
Yeah.
far as their rules, and they're not gonna break it. And they actually have this like cynical cynical remarks towards like discretionary
Yeah.
traders like, oh yeah, this is discretionary, he does, so what are your thoughts on that?
Yeah, it's a great question. Like systematic traders will sometimes get stuck in what I call backtest world, where they're just looking at the data, they only believe the data, and they're really missing the intuitive piece that a lot of discretionaries have in spades, right? Right. So the real good collaborations I see are with discretionary traders and systematic traders working together. Like collaborations are super important. A lot of traders are really secretive about what they do, but really the best traders look back on their career and wish they'd have shared more. And that's kind of where some magic happens is when you can build trust with other traders and share ideas and really come into it with an open mind. Um, so I think a lot of times the hardest thing, well, the only thing harder than coming up with your first profitable trading strategy is coming up with your second. And I think once you come up with your first one, you're like, okay, I've kind of figured it out. This is the way trading works. Like everything sort of revolves around that. So you get kind of fossilized in your thinking. So it's always good to be always thinking about the next idea, thinking about maybe, how are you wrong? How can you come up with better ideas and additional ideas that are, completely additive to what you're doing now? Maybe something that's like completely opposite what you're doing now, like literally maybe the opposite direction. So a lot of people when they think of collaborating with other traders, they want to they're looking for clones of themselves, but really the opposite. You should be looking for somebody that is trading differently than you are and figure that's where some magic can happen when you come to it with an open mind, you have like a system for building trust with other traders and really share your ideas. And that's where a lot of collaborations can really take off.
And that's well said, So yeah, it's when you're speaking about that, I'm going through in my head like my previous experiences just like that. So yeah, I have some friends that like I'm not really a big data person. I'm not an Excel guy, but I have friends that they're good at that and that are traders, they're great traders. And it's like it complements really well.
Yeah.
And then like my view, because I guess I'm more like an artsy kind of guy. Like I'm a creative and I see things differently. I journal differently. I don't use like so much data. I do incorporate data, of course, but like I'm imagining the other side of the trade and the hypothesis that I have. It's kind of, it's almost like a conspiracy theory. I have constant conspiracy theories of the
Uh,
stocks. So
yeah.
so
Well, most traders and most people in general are takers, but you should really be a giver. So when you go into a collaboration like this, you should be thinking about not, okay, how can this other guy make me better, or what can I get out of this guy to make my trading better? Like you should be thinking about how can I uniquely help this person be better make his life better, make his trading better. And it sounds like your systematic minded friends could really like that there's such a valuable thing for you guys putting your heads together and because you have the skill set that they don't have, you probably have more ideas and more intuition about the market that they have, but they have a lot of data skills
yeah.
that they can provide you. So like figuring out questions that you can ask that they can answer maybe, and the opposite is that's I love when that happens because there's so much potential in those kind of things, uh, and the default person is like a taker, and you want to be a giver. You want to figure out, okay, how can I make this trader's life better?
Yeah, that whole reciprocating value, it goes such a long way in the trading, especially for retail traders trying to figure it out. If you can add value to someone, oh man, it goes a long way. I've opened uh my world to people that have added value or early in my career, well when I started to hit success, like someone that knows how to code that can help me build bots or that someone can, it's like I don't know that stuff. Like, so it adds a lot of value and then I trust the person, I share, or the person trusts me, they share. So
Yeah,
it goes a long way. Dave, I wanted to also ask you, okay, so those discretionary traders that you help build the systems, do you have to, okay, so after a while, let's say a discretionary trader, you start to incorporate some algorithmic trading, some systematic approaches, because it starts to click. It's like, oh, this can be systematized. Wow.
yeah.
Now, when it starts to when they start to see the results, do they get like sold on now being systematic? And it's like you let your guard down on being discretionary what's your thoughts on that? Like a trader that gets
Sometimes,
exposed.
yeah. Sometimes a very typical path is somebody that's completely discretionary, but they're trading a system systematically, so they are, trading discretionary, but it's really a system that they realize could be automated. And the typical path is they start creating something that's similar to that. Whenever somebody is a good trader and they've got something working, I don't like to completely replace it right away. What I'll do is work with them to, okay, let's come up with something that is modelable, that's like adjacent to what you're doing, that, is in a space that they're familiar with, and create something from the ground up to be automated. And that way it's completely additive to what they're doing. There's not this like switch over of like, creating a bot to do exactly what they're doing. That's usually a much easier transition. But what happens is, yeah, they see the bot coming and, taking trades that they know they couldn't take, maybe taking more trades than they know that they would ever be able to take discretionarily, getting better fills than they know they'd ever be able to get discretionarily. So a lot of times traders sort of lose interest with the discretionary trading. I mean, that's a pretty typical path. But really what it helps them do is uh, it helps them figure out the real value that they provide to their trading. Discretionary traders, they're not, the real value is not, you clicking buttons and making the actual trades, right? It's the ideas, it's the intuition you have about the market, it's the experience you had. And the way you do have your ear to the ground, it can have a sense. Like I used to I used to believe that like discretionary traders really didn't exist, but man, they have a lot of intuition, a lot of experience that systematic traders can learn from, and the opposite's true too.
Now, what are your thoughts on the vice versa, a systematic trader going discretionary, especially if the systematic traders had a lot of success?
Yeah, I think that's really hard. If they've had a lot of success, systematic trading, it's going to be hard to go fully discretionary. I mean, I sometimes will delve into that world and I realize just how bad a discretionary trader I am. I really need to have like a full set of data to have confidence. So I think it's harder to go the other way, and that's why I love these collaborations. And I think that's it's good to understand what you're good at and what you're not good at. I mean, you shouldn't be trying to be good at everything. Like figure out what you're good at and really, dive hard into what you're good at and, don't really worry about what you're bad at.
Awesome. And I wanted to get your thoughts, especially about in the small, I focus on small caps for the most part. Sometimes some mid caps, but like, and I'm trading every day. A lot of the community, that I have is trading active traders. Now, what we've noticed in small caps, or what I've noticed in small caps the past couple years is just the volume just keeps increasing, increasing, increasing. And I remember when I first started trading, like 2016, this is like it's a completely different landscape now in the small cap world. So I think like some bigger players have been entering, and I think the technology has gotten better and faster, and these guys that are bigger players have access to more sophisticated things. So it's like I think we're engaging with like a lot of algorithms now in small caps. So like, how does someone compete against that, especially when they're starting out? Because I have experience and I can adjust accordingly. But someone starting out is just like it's a real uphill battle to be constantly fighting algorithms. Like we have stocks trading 300 million volume, 500 million volume,
Yeah.
billion shares, 2 billion shares in small caps, and the float is just 5, 10 million floats. It's just rotating. It's just like algorithms. That's not natural. It's not organic. So I want to see your thoughts on that, on how the whole algorithms have infiltrated the retail side of the market, especially in small caps.
Yeah, I think you can talk yourself into thinking the market's changed in fundamental ways and uh you know uh I know some people use that as kind of an excuse. I've heard so many times that such and such strategy no longer works anymore. I mean, I've just heard it so many times. And that's where I think systematic trading is so helpful because as a discretionary trader, you don't really have, you got your intuition, you've got your experience, but to really be able to gauge, okay, what has changed, a back test in that situation is just so valuable because you can see, okay, well, I see maybe my trading's not uh, doing as well as it normally is doing. But if you don't have a back test to be able to go back and see, okay, well, how does this drawdown measure to what has happened in the past? Like you get you can very easily get lost and blame your drawdown on certain things. But when you've got a back test, you've got this really awesome reference that you can constantly look at, and you kind of uh, you can see it's like a truth seeker. Like you could see what's happened, and it's really a path to confidence. I talk a lot about a path to confidence on the podcast where, you know, I think trading is, I mean, it's hard, but it's not that hard if you're not trading with a lot of size, and that's relative for whatever your financial situation is. But if you're trying to raise your size to significant size that's meaningful to you, that's where it gets really hard. And you need to be able to do that and trade with, very significant size relative to your account. You need to have a path to confidence. And I think that's a lot easier to have with the back test to see, okay, what's this strategy done for the last 10 years? What does it look like? How many trades came in over that period? What does it look like now compared to what it has been then? And you, it's kind of an antidote to these, rumors and any sort of thing that any sort of changes in the market. Doesn't matter what the change is. If you've got this reference to look at, that's a really powerful thing.
Yeah, backtesting is so important. So you mentioned 10 years. I've heard some really good systematic traders, they do 5 years. So if for your backtesting, do you recommend 10 years or like yeah, what's a solid amount of time frame?
Yeah, I think it depends on the strategy. I've traded like 25 different strategies, so it varies. Depends on like the number of trades you're getting in the system. Like I've got some where, a couple years is plenty because they trade real frequently. But then others, you have to have more data because they don't the events just don't occur that frequently. So it all depends, but yeah, I mean, the more the better. You may as well do it with as much data as you can get your hands on, and you can always lop it off and not look at data before a certain period.
Gotcha. And what tools do you use to backtest?
I use AmiBroker. I use Trade Ideas. Um, I think those are the best ones. AmiBroker is great. Like any software that you can use that scans the entire market and is able to backtest the entire market is good. There's only a few that do that well. The other important thing is you need to be able to add custom columns to your backtest. So that and those are data points that you can know about at the time of entry. So a lot of the traders I work with, and I have a whole library of columns that I add to every back test. So, you know, hundreds of columns that you end up optimizing on. So, it's a much quicker way to come up with a profitable strategy than uh, software like TradeStation or or Ninja Trader. There's several out there that where you can't backtest across the entire market. So you're just more limited in what you could do. It's just a way easier path to edge when you can backtest across the entire market like that.
Gotcha. And okay, so for the small caps, like what I'm trading mostly, um, with the back testing, like what amount, a percentage amount would you say is like slippage, or would you consider slippage for your back testing in general, and
Yeah,
for
so
especially small caps?
yeah, so I don't try to model slippage in my backtest because you're never going to be able to model it perfectly. And I see more traders that are sort of stuck trying to get data that's perfect and it sort of gets in their way.
Mhm.
So what I like to do is backtest and have that as sort of the a perfect entry, knowing that you're not going to get that entry in real life. But I like using that as a perfect reference that I'm working toward, and then say, knowing that I'm going to fall short of it in some way. So it's good to have like some, as you're creating a strategy, have some number in mind that's some percentage of the average profit per trade, say, that you're just going to miss through slippage and miss trades. But a lot of traders get stuck like trying to figure out the perfect model to model slippage, and it's just sort of uh, it's a bit of a waste of time to do it at that point.
Gotcha. And okay, so one question I have too, all right. So in small caps, we have a lot of these bad companies that have a lot of dilution or potential dilution, just diluting the stock constantly. And I use like tools like Ask Edgar. I don't know if you're familiar with them, and to help
Mhm.
me out with that in a discretionary way. And I feel like I'm like a composer in a symphony sometimes. I'm like looking at so many tools and then
Yeah.
coming back to the screen and executing. Right, like, and I can imagine there's some, I could probably systematize it somehow and have an algorithm do it instead of me just like doing conducting the symphony here. Um, now how, but I haven't seen, I'm unaware at least, of how that could be done. Like something with, like dilution, like warrant prices or some way to make it a lot more efficient because like, I have to go in there one by one and look at the warrant price and see the stock up certain amount per day and see like
Mhm.
you know is there a way, for example, I can just like uh be like tell the algorithm or the robot or whatever, say, hey, short everything over 20% above any warrants and across the whole small caps.
Yeah, yeah.
you
So
know
so the way I would handle that is I would be looking for any data point like that are in your orchestra that you're conducting, and you're getting overwhelmed with what to include, what not to include. Those are what the columns are for in the back test. If you can reduce whatever you're looking at to a column, and then you can use a tool to optimize across the entire column set. So you could see what's important and what's not. So it'll tell, like I've got software that will tell you when you run a back test through it, it'll tell you the most important rules that you can add to your system. So a lot of stuff that traders assume to be true, if they were to go and look at a back test and then run it through an optimizer like I provide with MabeKit, you would see that it's not actually important at all. Like this other factor is way more important, and it's going to tell you the exact uh, point to use to apply to your strategy. I see a lot of traders where um, they're trading a strategy is working pretty well. Maybe they have some drawdowns every now and then, but right away, I work with them to find a way to get rid of like 20% of the trades they're making. And it's pretty clear when you see from the back test where, okay, you've got your whole strategy is right here, but there's one pocket of trades where it's solidly red. Like it's pretty motivating to see that and know that, okay, well, all right, 20% of the trades I'm making are losing money. I'm going to stop doing that. And then your strategy gets more efficient quickly.
Wow. And how would you, okay, so omission. So basically you're just refining the strategy. So let's say you got a real profitable strategy, but it's like you can still like take away some of the traits and make it more efficient. So how does someone begin to like dissect a strategy that's already working? Because it looks good, but like it could be better. How do you like go, like, for example, me as a discretionary trader, I'll see some system traders and they're doing well, but I'm like, man, if you would have just eliminated this whole category of Chinese stocks, for example,
Hmm. Yeah.
their trades would have been better. It's like you take away 10 of those trades from this category of stocks and their results are 20-30% better, let's say. So how does someone like, I guess you got to be watching and like noticing the pattern in order to realize that. How would
So, yeah. So, uh, what I provide with the software that I sell, MabeKit, there's a column library. So you automatically get to include this in your back test, and there's instructions on how to do that. And there's all these different columns in there that I've used to, these are the, you know, columns that I use to apply rules to create strategies. And I can guarantee, I mean, there's so many traders that come in and they're like, oh, wow, I had no idea that this was even a factor at all in my trading. And here, uh, you've shown this rule where I can get rid of 20% of the trades that are performing poorly. So, and that's really the way you learn because typically what happens is somebody will start optimizing in this way, and they improve their strategy, their main strategy. They get rid of the 20%. But really the power is what that implies. Like so they're able to find this relationship where they didn't know existed that's highly predictive with their strategy. And they're like, okay, if that's the case, I can create a new idea based on that and come up with a new starting point, a new strategy that has more trades and more average profit per trade. And it's completely additive to what they're doing. So that's really how you learn and how you figure out what is predictive and create strategy two, three, four. And then, your trading just gets more and more robust the more strategies you're able to add to your arsenal. I mean, each one of them might go into a drawdown, but overall, your equity curve is just going to be a lot smoother. It's going to feel more robust.
Awesome. Well, thanks, Dave, for sharing with us the systematic approach. And I think it's really important, especially for discretionary traders like myself, to always be paying attention to how we can improve our results, our trading with using the tools at our disposal. And one of those is being, the systematic approach with data and algorithms and these kind of things. And the same thing for system traders. We can both collaborate and come, and improve and help us each other improve. So thanks for sharing all that insight. And Dave, yeah, where can people find you?
Yeah, so the best thing to do, I've got a free email course on backtesting called betterbacktesting.com. You can go there, sign up for it'll go through the basics of backtesting and how you can get started. All those come from my personal email, so you can hit reply if you have any questions and get in contact with me that way.
Awesome, awesome. I'll have that in the show notes. And yeah, thanks, Dave, for coming on the podcast. And yeah, we'll talk soon.
Yeah, thanks a lot, David.
Thanks.